Best guest time. Reminder, read everybody's best guess on my latest commentary, CassoniExchange.com. Also follow me on Twitter. I follow Stock Twits. You can follow me and find Stock Twits at Cheryl Cassoni. All right, best guest time. And Tyler, I'm going to start with you. What do you have today?
My best guess has to do with employment. We've seen markets rally with a supposed better economy going forward, better employment numbers. My best guess is that people are going to be very surprised on the negative side that things disappoint. Specifically, we see what's going on in the muni markets, state, local governments, federal governments. We're going to see massive layoffs, and that's really going to pull down the positive news in the private sector. So we're going to see some disappointment, I think, some pullback in the market as we look forward mid-year.
And Tyler, you're pretty cautious. I mean, I've known you for a couple of years now. Yeah. I mean, so to hear you say this kind of surprises me just a little bit.
Yeah, well, we've seen some unbelievable run-ups in the market, and the bottom line is there just has to be some substantiation there. This is momentum-driven, and we're just getting ready to hedge ourselves a little bit in a pullback.
Yeah, more bearish than normal. All right, what do you have?
Oh, I'm going to be optimistic on the stock market side. I'm going back to last week to Facebook and this $50 billion valuation. I'm going to say this is just the beginning for this company. Whether the company itself is really worth $50 billion or not, that's hard to say. But you've got Goldman Sachs' stamp of approval on it, and you've got 500 million users now. It's only 5 years in. What will that be 5 years from now? Who knows? But you've got a lot of smart people figuring out how to monetize all those users. And we can already sort of agree that Facebook has changed how people use the internet. So it's very significant, and things are looking up for Facebook.
Real quick on mine, you know, you've got a lot of talk about bankruptcy at the state level. We talked about it earlier the week on the show, and I think that governors and state legislatures are going to get down to business in the next month and figure out their problems. I think that they will get their constituents on board because there's so much talk right now of states potentially filing for bankruptcy if the law was changed. The law would have to be changed. Anyway, thanks to both of you. I want to bring in Tyler Vernon into this conversation because you saw the list of companies. Many of these are multinationals. That affects how they file. And some deductions may not be worth it, or, you know, legal, whatever you want to say here, but some are. And those could be gone from this proposal.
Yeah, I think there's some real risk here. I think this is a real political play. It sounds great on the headlines. We've reduced our corporate tax rate. But at the end of the day, it's a zero-sum game. And if we're going to change some of the deductions, like you said, we're going to have certain companies that are going to be hurt and some that are winners. You know, at this point, these large multinational companies have not rallied the way the small caps and mid caps have done. There's a lot of room for these things to run, and this would be something that could certainly hold that back. But we see a lot of value in that space.
Peter, and I want to take that to Tyler because if we do sell, you've got to have a buyer on the other side. And I'm wondering if the street is interested in AIG.
Well, I think, first of all, this is a very complex company, very hard to understand. We know what happened before with a lot of derivatives, and I think that's still the case. But I think the real issue is that we know there's one huge seller. We don't know who the buyer's out there, but we know we're stepping into this. There's a seller that owns 95% of the company or more. So I would be cautious when entering into the stock.
92%.
Does this in some way vindicate, though, these decisions? Nobody was happy about these bailouts that occurred 2 years ago. But does in this some way vindicate some of the AIG in particular was probably the most controversial of all the bailouts. But time has passed. This company has seemed to begin to heal. Does this vindicate some
I
of
think it
those
certainly
decisions?
does. I mean, TARP was very successful. We needed it. It was very unpopular at the time, and I think it was amazing what they did at the time. And I think this is great as we look back on it. But when we look at Fannie and Freddie, you know, there's some major problems there, and I'd like to see what happens there going.
Where else?
And I think gas especially is the problem. We're going to continue to see gasoline go up, and that's money that we're sending overseas that's taking away from our GDP here. So I think that's really the number to focus on. But when you talk about core GDP, or excuse me, core inflation, that's not taken into consideration. Some of the issues that I see in restaurant stocks in particular is these rising commodity costs, and can you actually pass that down to the consumer? And I'm wondering what your thoughts are there. Can you pass that down, and what that market looks like going forward?
So we're in a bit of a unique position. We formed a purchasing co-op about 2.5 years ago with both of our brands. So our combined buying power is about over $2 billion a year, and that makes us very unique in the restaurant industry. It's a highly competitive advantage that we have this purchasing co-op that we use for both IHOP and Applebee's. And let me remind you, when you are largely a franchise company, it really doesn't affect in any meaningful way our P&L because we're so focused on helping the franchisees. So we think the purchasing co-op is a competitive advantage, and certainly they've been able to, if they need to, pass on any increases. But clearly our co-op, which really doesn't exist in family dining or casual dining today puts us at a huge competitive advantage against everybody else in the competitive.
We saw in 2008 and 2009 massive shutdowns of restaurants throughout the country. I'm wondering now that we're in with the survivors that are left, how is that going to impact the industry as we look forward in 2011?
Yeah, I think really we haven't seen any contraction industry-wide within the restaurant industry. What we saw through 08 and 09, we saw a lot of independents, mom and pop stores going out of business. The chains still continue to hang in there and still thrive a little bit. But industry-wide, the store count stayed the same. Casual dining, by our estimates, is stored by 15 to 17,000 stores. That's a lot of stores that are out there, especially in that bar and grill segment. So that's another headwind that the casual dining industry has to fight. It's not only a declining demand, maybe even a permanent demand destruction, as the consumer has been so weak since 2006,
right,
but also too many stores out there.